SoFi stock just crashed 6% today. What the hell do we do with our shares next? SoFi investors, welcome back to the channel. My name is Jason, and in today's episode, I want to break down what we should do with our shares for SoFi as we move forward. And I also want to talk about where I think the price could potentially go, and a lot of it doesn't have anything to do with the company, and I'm going to explain why. If you want more SoFi content, more stock market videos, make sure you hit that like button and subscribe to the channel. We're closing in on 3,000 subscribers. You guys are the best. Man, take a look at this chart here, guys. Woo, baby, SoFi. What an up and down week. We shot up after killer earnings, then we shot down. It seems like some insiders got some wind of that public offering, the $1.5 billion. The stock crashed, then it recovered nicely, and then it sold off again today. What a roller coaster ride it's been this past week for SoFi investors. So, if we take a look at the valuation measures for SoFi stock, it's trading pretty rich right now, PE-wise, PEG ratio wise, price to sales, price to book, any valuation you want to measure this stock at, it's trading pretty freaking rich. But quarterly revenue growth year over year, 44%, guys. Holy guacamole. Those numbers are absolutely incredible, guys. Anytime you could grow the top line by 44%, that is remarkable, especially because this company is profitable right now, right? So to continue to grow like that is an amazing feat for this company, and I'm very, very happy what's going on. We got $2 billion in cash, $4 billion in debt. Not the greatest ratio ever, but banks usually carry a huge debt load, right? So we'll have to kind of manage this as we're going forward, but the current stock price at $21.20. As I mentioned earlier, once the offering got announced, I did sell 1,000 of my 6,000 shares, just kind of as like I wanted to take some profits. And if this stock price continues to sell off, I could get shares, a little bit cheaper, right? And, you know, we ran up to back to 23.65, then we sold off to right around where I sold my shares, around between 21 and 22 $2, right? SoFi Technology announced pricing of the public offering, right? So they issued a shitload of shares, guys. An uncomfortable amount of shares. 72 million shares got flooded onto the market. $20.85 share price for a total of $1.5 billion. In addition, guys, SoFi also granted the underwriters a 30-day option period to purchase an additional 10 million shares at the $20.85 price. So if the stock does run up $22, $23, $24 in that time period, they could buy the shares at $20.85. Goldman Sachs is the underwriter of this $1.5 billion offering. 72 million shares. We got diluted, guys. I do think SoFi is going to purchase a company with these funds. We'll have to see what's going on. They're supposed to get back into crypto, and acquiring one of these smaller crypto brokerages could be interesting. All right, everyone, I want to go over some of the highlights from the most recent earnings report. Look, adding 850,000 new members is a great number. We're almost at 12 million members. 17 million products in Q2 2025. We're crushing it, guys. 34% growth in products and members. The numbers are really, really good. The adjusted net revenue looking great as well. $858 million. Adjusted EBITDA, $249 million. $960 million guidance. Adjusted net income looks great. They're guiding for $370 million. It looks really, really good, guys. Adjusted net revenue, crazy. Crazy, guys. It just continues to grow and grow and grow and grow. Adjusted net revenue year over year growth 74%. It's remarkable. Fee-based revenue is looking really, really good. $378 million here, guys. We're looking really, really good. Fee-based revenue mix 56% to 44% of the fee-based revenue compared to all other adjusted net revenue. Adjusted EBITDA margin continues to increase year after year. Sorry about the stalling, guys. They're like building some apartment like 5 feet away from my apartment. It's crazy. But anyway, EPS looks great. They're guiding for 31 cents on the year. They came in at 8 cents. They were predicted to do 6 cents. They crushed earnings. Tangible book value continues to accelerate quarter after quarter and year after year. Net revenue, wow. Wow, 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 wow. The numbers are just up and to the right. Up and to the right. Contribution margin and profit gets better and better and better. I'm very, very happy with where we're at right now. The lending segment just continues to grow in millions. 32% year-over-year growth in adjusted net revenue from the lending segment. The contribution margins are like kind of in that 55 to 60% range over the last 6 quarters or so. Lending originations are up. Student loans are down a little bit. Home loans are up, which I really like to see. I think home loans is going to be a huge accelerator for this stock price as we move forward. All right. It was a crazy week, but 1 month, we're still up 20%. Over the last 6 months, up around 40%. Year to date, we're still at 50%, guys. Even with the little bit of a sell-off we had, up 196% over the last calendar year. SoFi investors, where do I see the stock price going moving forward? I think it's going to have a lot to do with the macro environment, right? With these tariffs, as you can see by this chart, the stock market sold off considerably because of the terrible jobs report, and inflation has went from 2.4% to 2.7%. The last 2 months, we've seen a tick up in inflation, right? So jobs are going down, inflation is going up. That is never good for the economy. So the stock market could see a bit of a sell-off in the near future. Okay, one thing I want to talk about with you guys is the civilian unemployment rate, right? So back in 2023, when Biden was in office, we bottomed out about 3.4% back in April of 2023. But since then, it's been a slow increase in unemployment from that point, right? So we're up at 4.2% right now. It's not looking good. We need to see this decelerate. I want to see unemployment go back under 4%. Under 5% is manageable, but over 5% is when the economy really, really starts to get affected and get hurt. People stop spending money and the economy will slow down. GDP will slow down, and so will the stock market pricing across the board, guys. So what am I doing with my shares? I'm selling puts right now, guys, at the $20, $19, $18, $17, $16, $15 range over the next 3, 6, 9, and 12 months, right? So I want to reacquire those 1,000 shares, but I want to try to get them cheaper than what I sold them for, right? So I can grab a little bit of cash. My big dog account's coming in around 250K. I have about 50,000 in cash right now. I did buy some stocks today early in the morning when the stock market really, really sold off. The stock market has been resilient, but I am expecting maybe a little bit of a sell-off, maybe a 2 to 6.5% correction over the next coming months in August and September and October. And then maybe we see that Santa Claus rally towards the end of October, November, and December, guys. So that's kind of where I'm at right now. The SoFi company is firing on all cylinders, man. They look incredible. The earnings report was crazy. Revenue growth, 44% year over year, was knocked it out of the park. 850,000 new members, closing in on 12 million in the ecosystem. The company is doing great. Macro-wise, with these tariffs, unemployment ticking up, inflation ticking up, it seems like we could be entering some headwinds for the overall market, guys. I just wanted to bring you up to speed on my thoughts in the market and what I'm doing with SoFi stock. If you guys want more videos like this, make sure you hit that like button and subscribe to the channel. Thank you so much. Peace.